Well, good evening, everyone. This is your co-host, Adrian Day, coming to you from Montreal this evening. Welcome to another of the On the Move webinars. And again, as usual, we have a very special guest tonight, someone I think you'll find very, very interesting. I personally always enjoy just having dinner with him and enjoying his company, where we have wide-ranging discussions. I don't know if we're going to get into the Russia-Japanese war today, Byron, but we'll see. Anyway, let me just start by introducing our co-host, the founder of this series, Richard Checkan. Rich, as you probably know by now, is the COO and president of Asset Strategies International, one of the premier, if not the premier, coin dealer, bullion dealer in the United States. And he'll tell us about some of the programs later on in the conference, in the webinar. But before we do that, let me just introduce Rich and let him introduce our guest.
All right, and that was Adrian Day, good friend, great source of information, expertise over the many years that we've known each other. Fantastic asset manager, author, sought out by every major network out there, newspaper, print, etc. Adrian Day, what else can I say other than thank you for being in my life? Along with us tonight, we have Byron King as well. So Byron King is an editor at Paradigm Press. Adrian and I both have known Byron for decades. It seems like everybody we know, Adrian, is decades. Byron comes to us with incredibly deep expertise and connections and energy, precious metals, critical minerals, and defense. His insights have been featured by every major network you can think of: MSN Money, Market Watch, Fox, CNN, Squawk Box, Larry Kudlow, Glenn Beck, PBS. I'll go on and on. Has been published in Financial Times, Boston Globe, The Washington Post, Wall Street Journal, and now the piece de resistance, Byron. You are on the move with Adrian Day and Rich Checkan. Welcome, sir.
We have reached the summit, haven't we? Yes, indeed.
We have indeed. Well, listen, Byron, let's just kick it right off.
Oh,
Um, with your expertise in geopolitics, your deep experience and expertise in defense and oil, all of that comes together with what's happening right now in Iran and the Middle East, because it's not just Iran, of course, it's broadening. So why don't you kick us off, take as long as you want with this introduction? Why the war? Why now? How is it going? And perhaps most importantly, where do you see it going in the weeks and months ahead?
well, thank you very much, Adrian. Thank you, Rich. Everybody who's watching, appreciate your time. Adrian, you surprised me earlier. You said that we're not going to talk about the Russia-Japanese War. And I wasn't planning to talk about the Russian-Japanese War of 1905. But you just reminded me that the Russian-Japanese War of 1905 was really one of the most important events of the 20th century because it foreshadowed so much else. It was the first time in 500 years that an Asian power, Japan, had defeated a European power. The Tsar sailed his navy around. They had a huge battle at Tsushima. He lost his whole navy over there. And the battles ashore were foreshadowing of what would happen in World War One. And so, why are we talking about this? Because is the Middle East or the Middle East and Ukraine? Let's put it all together in the, let's make the map a little bit bigger here. Is all of this foreshadowing something even, worse, down the line, in the sense that the World War II post-war world has been in decline for quite a while. I mean, the Cold War ended in 1991, 1990, 91 with the Soviet Union falling apart. And then, America took a holiday from history. We downsized everything. We offshored the whole military industrial base. Not, we closed Navy bases, Air Force bases. We closed shipyards. We basically closed down massive amounts of what we would call the defense industry. It's just not there anymore. And then we did this globalization thing where we outsourced everything to everybody. And it was all just in time. Somehow magically we'll wave our dollars and everything that we need shows up at the same time. And we put it all together. And we live this life of the glorious consumer in North America or Europe or other parts of the world. They consume stuff that's all made someplace else out of materials that all come from somewhere else. and somehow it's all the skids are all greased with these U.S. dollars, which all wind up back in Washington buying Treasury bonds so that the U.S. government can, spend way beyond its means. So where are we in the world? We are at a turning point. Is it the disaster of Tsushima and the defeat of Russia by Japan in 1905? We're not there yet, but it does make you wonder. I mean, we do have the Navy on the other side of the world, and I'm a Navy guy. I love my Navy. We want to, Rich, you're a Navy guy too, I believe.
Army, yeah.
Oh,
But we love you guys, except for one day a year,
we need the Navy to haul the Army around, but actually the Army can haul itself. Well, the Army can't
as
haul
an infantry guy,
well, buffering.
Loved your support. It's not just close air support, but the naval support was incredible. So yeah, no, we work together pretty damn well. So.
Okay, well, we won't go down these rabbit holes, but I know people are out there like, come on, talk about gold, talk about inflation, talk about money and stocks and what should I invest in and stuff like that. But we're at a turning point, and I mean, it's not this. Nothing happens just you wake up one morning and boom, the world is different. But you wake up enough mornings in a row, and the world is really different. I mean, we're coming up on 25 years after 9/11. Just think back to then, look at now, what happened to the country? What happened to the world? I mean, there has been a lot of water under the bridge, and, national debt, $40 trillion, what's 4% interest on, $40 trillion, 1.6 trillion. It's bigger than the Pentagon budget. That gets paid right off the top, so I mean, there are just so many things. I mean, we can't patch a pothole, let alone do anything else until they pay the interest on the debt. So, what does that mean for, Joe and Susie investor out there? Well, it kind of gets back to all that material you have in the background, Rich, with, the gold coins and such. I have my own little show and tell here. I brought my own gold coin. I don't have them all, on the shelf back there like you do, but, here's a 5-ounce gold nugget or a gold ingot, you might say. This is Republic National Bank, dates from about the 1910s, early 20s, I believe. It's 5 ounces of gold, and banks used to have this stuff in the basement, in the vault. This is what maintained the solvency of banks back in the olden days. They actually had gold, down there. Now, what do they have in their basement? We've got a bunch of wiring that goes to a bunch of computers, that goes to a bunch of server farms, and it's all ones and zeros. But the world is moving back to this. Price of gold has gone up, came down, but it's still up from where it was. Gold miners are making lots of money. You mine it at 1,200, you sell it at 4,000. Nice profit margin there, and so we could. I think that's enough to chew on. We could go on to the next.
Before you get on to gold and everything else, let me just add one quick follow-up.
Sure.
How significant do you think it is? The development yesterday, I believe it was, with Saudi Arabia coming in, because up until yesterday, it was really just the US and Israel, with other countries being on a getting the brunt of some of the attacks, but just on the defensive.
Oh, that's a really great question on the energy side and the geopolitics side. In my readings and in my studies of what do people say about each other over there? I mean, I was never a naval intelligence officer. I was an anti-submarine warfare guy and a bunch of other stuff, but I hung around with some intelligence officers, and I learned a few things. I'm going to tell you a secret. I'm going to share some of the trade secrets of naval intelligence. You watch what the other guys do, and you read what they write, and you listen to what they say. And when you do that and you apply it to our opponents over there, to the Iranians, to the Houthis in Yemen, you watch what they do, you listen to what they say, you read what they write. They have a sense that this is a war and they're going to win. And they view Saudi Arabia as a fake kingdom. They like to call it the fake kingdom. You say, no, they're our friends, they're our pals. They've got all this money, and that's not what the people over there seem to think. They are bombing Saudi. They have bombed very strategically, very amazingly good, targeting certain refineries and pumping stations and pipeline systems in Saudi. And in the last, 4 months of the war, March, April, May, June, well, July, 5 months, I guess, the Saudis, who usually exported everything through Hormuz, had this east-west pipeline where they were shooting oil over to the Red Sea, loading tankers. And so instead of exporting, 8 or 9 million barrels a day, they were only exporting, 6 or 7 million. I mean, they're, officially it was like five, but in terms of the shadow exports, it was more like seven. They were doing pretty well. The Saudis were actually making more money selling less oil at a higher price for the last few months. So we don't have to hold a tag day for them. But what the Houthis have just done and what the Iranians have, they have hit some very strategic spots. And the Saudis are definitely in the war. You can call it whatever you want. You can say, oh, it's a, we adopt the Russian, it's a special military operation. It's a war, it's a conflict, it's a war. The Saudis are taking hits. Before I came, down and sat at the desk here, I was, perusing the news. I just saw a burning LNG tanker in Egypt in the entrance to the Suez Canal. Somebody somewhere, shot something that hit a liquefied natural gas carrier and blew it up, and the Egyptians are out there, hosing it down, getting it under control. I mean, so this thing is big and getting bigger, wide and getting wider. And where will it go? Will somebody somehow put a lid on it? Another point I just want to make real quick, because we want to get to the gold and the investment side. Rich, Adrian, me, we were around, let's just say, way back in 1979 and 80 when the Iranians took over, the U.S. Embassy. We remember the hostage crisis. We lived it every night on ABC News. Ted Koppel, America held hostage day, whatever, 278. Jimmy Carter became a captive of the White House. They called it, the Rose Garden, Rose Garden strategy, where he had to run the country from the White House because he could never leave, because he was always, oh, what about the hostages in the U.S. Embassy in Iran? I'm concerned that the Iranians are trying to play that same rope-a-dope game with Trump by, when Trump backs away, when he says, okay, we bombed you, and now we're going to have a pause. We're going to pause. We're going to stop. I'll let you in on a secret. The reason we had the pause is because we ran out of targets. Okay. We hit everything that's worth hitting. And then, okay, maybe there's a tier 3 or tier 4 target out there that we could bomb. But why risk the airplanes? Why risk the pilots? Why shoot off these expensive cruise missiles for something that doesn't really matter? We had a pause because we kind of blew up everything we wanted to blow up. And then, last night, our Iranian counterparts over there are like, oh yeah, well, boom, they fired a bunch of missiles at U.S. troops in Jordan. I mean, they were aiming at our people. They want to kill our guys. And our gals, and somebody whose son is in the army and who was in Iraq, like, I don't want to see that, but and then Trump is like, oh, we're going to really, hit him back hard on that. This is, be careful of that whole, 1979, 1980 redux again, where you're trapped in the White House because those Iranians over there are just, they're just ringing your bell, they're just pulling, they're putting needles in their little Donald Trump doll, making him mad. And he's like, oh, we're going to bomb you again. The world has to go on. And,
well, Byron, how do you see it going on? Is there a peace, whether temporary or otherwise, that can be achieved? Do you think both sides are open to that? I think a lot of people believe that we bit off more than we can chew, didn't look at all the consequences with the Strait of Hormuz, the effect on oil, the effect on, worldwide markets. Is there a solution where we all get out of here saving face? Or does it have to escalate to do that?
I'll leave the deep details to the historians, because I mean, they will peruse the message traffic after it's all declassified in 25 years or something. Is there a way out of it? There sure as hell better be. Because if Iran is starving for money, I mean, keep a blockade on there, keep control over what goes in. Eventually, they've got problems. But at the same time, that missing, pick a number, whatever it is, 10 million barrels a day, 12 million barrels a day, 14 billion barrels a day, plus everything else that goes in and out of the Strait of Hormuz. that is affecting everything from, price of gas, diesel, jet fuel, to price of plastic, price of, airline tickets, I mean,
Fertilizer.
you name it. And, guess what? We love the mining industry. This is what we do. We go to these conferences and visit all these gold miners and copper miners. Guess what they use to mine their ore? Diesel. Uh, it's
It affects every product that
it
goes to
affects
market.
everybody.
So,
Yeah, yeah.
so their strategy is clearly twofold, have an economic impact
Mhm.
and, they saw the results of previous, conflicts, whatever you want to call them with us, Vietnam or elsewhere, where, you get the public sentiment against the war effort and they know the impact of that in the US. So I think their strategy is very clear. Can we outlast them, I guess is the question. And where's oil and markets when we're all done with this?
Well, we've been playing games with oil for, since the war started. Every Friday, Trump would come out and make some announcement. Oh, we're gonna work on peace over the weekend, and boom, the price of oil would go down. And then on Monday or Tuesday we'd be bombing him again, and price of oil goes back up. And meanwhile, the U.S. and other nations have been draining their strategic petroleum reserves. We have one. Lots of other nations have SPRs as well, much smaller than ours. China has a big one. China kind of went on a buying hiatus for a couple of months in terms of, part of it is like making a virtue of necessity. The tankers weren't there, and they didn't want to pay, $180 a barrel for oil. So they just, okay, we're just going to draw down that billion barrels that we have in storage in China. But China's back in the market now. And oh golly, I don't want to get too deep in the weeds, but one of the problems is that not all oil is the same. I mean, I'm an old petroleum geologist. How I started working for a Gulf Oil Company, which is now part of Chevron. But you've got your light sweet stuff, which has low sulfur and not a lot of the heavier hydrocarbons in it. Then you got your heavier sour stuff that has more sulfur, et cetera. A lot of the world's refineries are built for the heavy sour. The U.S. Gulf Coast, India, many of the Saudi ones, China, Northeast Asia, Korea, Russia, and certain refineries are just built for this kind of crude. And if you don't have it because those barrels aren't coming out of the Persian Gulf, through that Strait of Hormuz, it's not you're not going to make it up with fracking oil from the Permian Basin or something like that. So I mean, again, it's an oil problem, but it's also a logistical problem of moving this barrel to where you can refine it. And then you've got the logistical problem of refining it into the stuff you need, because nobody uses crude oil except the guy that runs the refinery. You don't put crude oil in your car. You put gasoline. You don't put crude oil in your truck. You put diesel. You don't fly airplanes on. You use jet fuel. And et cetera, et cetera. Downstream. Plastic. All the other resins, naphtha, chemicals, all these things that come out of a barrel of oil. That whatever the number is, that 80 or 90 or $100 barrel of oil. If you do it right, you're going to get $500 worth of value add out of it at the other end of the refinery. But when we're blowing up refineries, or when we are stopping the flow of the feedstock that go to those refineries, the downstream implications of this are phenomenal. We will be months, if not years, unscrewing this mess, unroping this goat rope, so to speak. If it all ended like tomorrow morning, which it won't, so everybody out, stand by, just protect yourself, protect your wealth, preserve your wealth, look for ways to get income out of this thing, watch for inflation. Brings us back to gold and gold miners and mining and things like that.
Byron, on oil, is it, we obviously know, and again, we lived it, but we obviously know that the US is in a much different and a much stronger position today than they were in the oil embargo in 1974, and even in the Iran invasion of Kuwait in 1990. We're in a different position and a much stronger position in that we don't import so much of our oil from the Gulf region, from the Middle East. But is it fair to say, with what you just said about different types of oil and refining capacity, is it fair to say that the US, how sort of, I'll say, however bad this gets, the US and North America generally can withstand it in the sense that they would have sufficient supplies. I mean, it will be a question of what price, but they won't actually run, we won't actually run out of oil in the way that
I
in 74 we could have done.
in the mid 70s, we literally could have run out of oil, just not enough. Yes. Today, no. Today we are in a much better position, as you mentioned, Adrian. Yeah, between U.S. domestic output, which is a lot of light sweet oil, but we've got the heavy sour stuff too. But then we also import 4 million barrels a day from Canada. Let's call it Alberta. Through the Enbridge pipeline and that whole the Keystone system, all that. And Canada's a bizarre nation in its energies. Back east it's all net zero. Out west it's like let's produce our oil sands, and yin and yang. And then you throw in Venezuela, although I'm mentioning Venezuela out of politeness. I mean, Venezuela's up to about a little over 1 million barrels a day of exports, which is great. But when you look at how really messed up their oil industry is after 20 years of Chavezism or Chavismo or whatever they call it down there. The infrastructure is horrible. Pipes, valves, control systems, power systems, roads, the skilled labor, everything is a mess. Now you add the earthquake down there. But so okay, but we do get, we can get 1 million or so barrels a day out of Venezuela. At the same time, when somebody says, gee, is that a lot of oil? 1 million barrels a day? Yeah, we call that North Dakota. I mean, we call that New Mexico, in terms of like what the U.S. is producing. But the U.S., if push comes to shove, and that if push comes to shove, we're just gonna freeze the rest of the world out of. We're not exporting anything to you guys. We're keeping it all here. How long can that last? I mean, how do we want to watch Australia or New Zealand, just completely choke? I mean, what are we going to do with our, European so-called allies? I mean, does it really work? That's not how the world can really work. I mean, look at Japan, look at Korea. Japan imports, 99.9% of its, liquid fuels. They have zero. They have this much, oil production in Japan, and if they have to have access to oil because you cannot turn the lights out in Japan or South Korea. You just can't. So it's going to be interesting to all the poli sci majors are going to find something to do with their book learning here.
Yeah. Should we stick on oil a minute, Rich?
Yeah, if you want to add anything to, how that ends up, I mean, it's mind-boggling to me that somebody comes out with a sound bite and all of a sudden oil's up over 100, and then they come up with another sound bite and it's 80. It seems like the market is moving a lot too quickly on sound bites and news, versus what's really pushing things. So my question is, at the end of this, what does it look like? I mean, is it waiting in line for gas, or do we just kind of go back to normal? Or, like you said earlier, it's a logistical nightmare. Is this going to take months or a year to get everything primed again, like it did with COVID, where the ships aren't in the right place, and you may have goods over here and you got ships halfway around the world. You got to get that system moving again in tandem. Is that what it's going to look like in the end?
Well, nothing will resolve quickly. I mean, if like I said, if peace broke out tomorrow morning, okay, everybody, we're deconflicting. We're backing off. It's all over. It'll be months before we begin to see, something that begins to look a little bit like normal. If we, whatever normal used to be. In terms of, what should somebody do right now? If you're an investor, I mean, you should be looking at, energy plays that are not anywhere exposed in the Middle East. I mean, U.S. domestics, Canadian oil sands. A company like Petrobras of Brazil, PBR down there. I mean, they have zero exposure in the Middle East. You want to look for companies that are solid. That's where you want to put your investment money. And I've had this discussion many times, and people haven't been investing energy for 10, 12 years because they view oil as a terminal industry. You know, I offended a few people the other day by saying, you're out of your freaking mind if you think oil is a terminal industry. We're going to be using oil for decades to come.
This world as we know it was built on
don't get
dinosaurs.
target fixated on, oh, I'm going to replace my gasoline car with an EV. Good for you. Put some solar panels on your roof to charge it to. But you know what? That's not going to change the world. The world, something like 84% of the world's energy comes from oil, natural gas, and coal every single day. If you add up all the BTUs, all the kilowatts, all the joules, all the newtons of power that come out, 84% of it comes out of fossil fuels. And with $2.5 trillion worth of renewable investment in the last, say, 20 years, they've moved the needle on that by like 1.5%. It's statistical noise. It just doesn't matter. And you can't do renewables without oil. Okay.
It's just not feasible.
How do you build a windmill? Well, first you dig a really big hole in the ground with a bulldozer or a backhoe. And then you put a whole bunch of rebar in there that comes from a steel mill that melted it. And then you pour a whole bunch of concrete on it, which you make concrete with heat. Hello. And, then you put a 2,500 ton, cement base there. Then you put a big steel pole, oh yeah, covered with zinc, galvanized. Oh yeah, a bunch of aluminum, a whole bunch of rare earth elements, and these big, huge windmill blades up there that that are not recyclable at all. They wind up burying them out in landfills in Wyoming and stuff. There's nothing renewable about so-called renewables. I mean, wind is free, so the sunshine's free, but the stuff that you use to capture it, they're not, and they rely on oil. So when people say, "Oh, oil's a terminal industry," you are so misled. You have drunk the Kool-Aid so deeply that you get over it. Okay, no. Go to the nearest bathroom and purge. Get rid of that Kool-Aid and come back. Sober up and get back here and let's talk reality. Because the oil industry will be around for a while, and if you want the most despised sector of the oil industry right now, where everybody just hates it. They shun it. They just like, I don't even want to think about this part of the oil is offshore. Okay. Everybody hates offshore. Good. Go and buy the offshore players, go and buy some, Transocean, or go and buy some Oceaneering International, I recommended Oceaneering at $8 a share. It's like 40 now. Love the chart, So, it's just, it's, what are we going to do? You, me out there? We can't change anything. Whatever's going to happen is going to happen. What you can do is, you just kind of make sure that you're coming out of it, as intact as possible. And so if you're looking for, investment safety, if not, places that, things that ought to go up, oil that's not in the Middle East, domestic oil, Canadian, other foreign, and definitely offshore, and the oil services, Schlumberger, Halliburton, Baker Hughes, those guys, they're looking really, really good as things unfold.
Well, we've had, obviously, you mentioned one that you bought has had a huge run, and of course, North American E&P companies are all up a lot this year. Would you still be buying them? That's a question, or would you be waiting for a pause, for a truce, and a better price to get in?
Well, here's where you have to do some stock picking, and I guess I should say that I'm not giving anybody personal financial advice here. I think none of us are. That's the lawyers talking through from Paradigm Press and Agora. We're just having a discussion here. But this is where stock picking comes in. You can. What about Exxon or Chevron? Well, people say, I didn't come here to hear you say good, tell me to buy Exxon or Chevron. Well, yes, you ought to own them anyhow. They're good companies, and they pay dividends, and the management, they'll sell their kidneys before they cut the dividend, and these guys.
But you think they're not overpriced now?
I don't think so. And in terms of where things are going, they have access to oil, they have access to capital, they have deep technology, great bench of people. They know how to do deals. And when you look at some of the things that they're doing, Exxon's developing offshore Guyana in northeastern South America there, and Chevron's got a piece of that as well. Chevron just inked this deal with Iraq to build a pipeline to the Mediterranean, so that again, get around the Strait of Hormuz. When the bombs stop falling I mean, a pipeline to the Med from Iraq through Syria to the, to the ocean terminal. That's going to be that's going to be just a license to mint money for the Iraqis, and Chevron is the partner on it. So and I should mention while I'm at it that if ExxonMobil produces about 20% of the world's helium. People probably have heard, oh, there's a helium crisis because the helium can't get out from Qatar. Yeah, there is a helium crisis, but on the other side, from the LaBarge facility in southwest Wyoming, Exxon produces about 20% of the world's helium. You need helium for not party balloons, but for
I was going to say birthdays are going to suffer clearly.
Yeah. Party balloons, they're the first thing to go. I mean, you need helium to make silicon chips. Okay, you need helium to do deep sea diving. You need helium to do welding. You need helium to launch rockets. Hello, Elon Musk. I mean, every rocket that gets launched, they purge the system and everything using helium to get all the hydrocarbon stuff out of the lines, because you don't want to form ice in your lines, and you don't want reactive gases in your lines. So they use helium. Every rocket that gets launched, I'll just throw a number out, it uses about $1 million worth of helium. So it takes geological time to create a helium deposit, and so, but anyhow, ExxonMobil has the LaBarge, Wyoming. So there's a lot of reasons why you would like a company like Exxon. But in terms of other domestics, I mean, oh golly, I mean, look up in Canada at oil sand plays, Cenovus, at what they're doing. Oh golly, Syncrude. I mean, they pump steam down in the oil sands. They do this steam assisted gravity drainage. They recover the stuff. They recover the stuff. It's bitumen. It's not really oil, and it's so thick and tarry that they have to dilute it with the equivalent of like diesel fuel. But they're exporting 4 million barrels a day to the United States, and we may be able to do a little Fortress North America thing when it comes to energy, but we're not independent from global prices. Just because we have access to oil doesn't mean we have access to cheap oil. I mean, we'll still be paying the big price, and somebody's going to be collecting it. Who at the production level. Yeah.
Gotcha. So obviously, we kind of jumped forward a little bit, but that's okay. You're covering some of the opportunities that are available to investors as a result of this conflict. And obviously oil and all the plays you mentioned are one of them. Any others? I mean, defense contracting, trying to think cyber warfare, things of this nature. What else is going to benefit from this?
Oh, well, in the U.S., I mean, the usual suspects in the defense industry are going to do very, very well. I mean, if you look at their charts, they've already had huge run-ups, but guess what? They can run up some more from where they are. When you look at the backlog of business, I mean, Lockheed, they're going to be building F-35s, and they're going to be building their missiles, for years to come. You look at Northrop Grumman, they've got the B-21 bomber program, they've got the next intercontinental missile program. Northrop Grumman makes super advanced, radar sets and all sorts of electronics. You look at Raytheon, missiles like you wouldn't believe. The aerial missiles, the Standard missile that the Navy shoots, Tomahawk missile that we shot so many off that we shot like 15 years worth of Tomahawk production in the last couple of months, and that has to be replaced. Forgot General Dynamics. I mean, they build they build submarines up in Connecticut, and they've got a book of business, like you wouldn't believe. And then the other big shipbuilder is Huntington Ingalls, and I recently, a month ago, visited the Huntington Ingalls facility at Ingalls shipyard in Pascagoula, and I watched them building Navy ships. I managed to get an invite to go boots down there, and I couldn't take any photos because it's you're behind the wire. It's a national security site. No pictures, Byron. Sorry, but there's enough out there on YouTube that you can kind of figure out what's going on. Phenomenal. We think of, they're big and inefficient, and these big defense contractors. I don't know. Huntington Ingalls has really rebooted how you build these big complex warships. I don't want to say the best thing that ever happened to them was Hurricane Katrina, because that was a terrible thing. But they got wiped out by Hurricane Katrina in 2005, and they spent the next 7 or 8 years rebuilding the shipyard from literally the concrete up to be a world-class production facility for large, complex naval vessels. And these things are big and they're expensive because they are complex and there's a lot that goes into them. And you say, wow, but big ships, they're just big targets. Well, fixed installations are big targets too. The good thing about ships is that, if you can sail them away at like 20 or 25 knots, if you're an aircraft carrier, you can sail away at 30 knots, and so when somebody aims at you, you can get out of the way. So a company like Huntington Ingalls is a company that they've got. Oh God, they have to have 20 years worth of business right now, on the books, and they figured out how to do it, and they know how to make money, and they said, well, what about drones? They do drones too. They all do drones. I mean, Boeing does drones, and Northrop does drones, and Raytheon, everybody does drones. The ships of the future that we're building are not your granddaddy's, gray hulls. They're not just these gray ships that sail around full of sailors and angry Marines. No. These things are command and control nodes. They have a lot of electric power inside of them. They have a lot of electronics. They talk to the satellites. They can talk to the submarines. They can talk to. They have drones that go underwater. They have drones for the surface. They have drones for the sky. And so I could talk about this all day. Actually, I do talk about this but it's time for a public service announcement. Paradigm Press and Strategic Intelligence with Jim Rickards. This week, as we speak, we're publishing the August issue of Strategic Intelligence with Jim Rickards. He's talking about artificial intelligence. I'm talking about AI, artificial intelligence, and drones. So I do a 2,000 word deep dive on drones, as deep as you can go in 2,000 words. Sorry, that's, the publisher only gives me so much space, but I got pictures, I got, explanations, things like that. So there's so much to talk about. And people say, oh, America, we're so far behind. Yeah, we're behind in certain, kind of areas where there's a lot of flash. But I assure you that our guys, because I know who our guys are and I've met them and I've actually we know a lot. I was at a conference a couple of months ago. I met the Anduril guys. They're a privately held company, but oh man, they are scary good. The Anduril guys. Oh wow, they have stuff like you wouldn't believe. I was standing next to this one big thing about twice the size of an SUV. I'm looking at the builder's plate on it. It's rated for 6,000 meters of water depth, and I wound up talking with the designer for 45 minutes. 6,000 meters of water depth. That's over 19,000 feet. That's 20,000 feet. But this thing can cover, like 90% of the world's ocean bottom. And you say, well, what do you do on the bottom of the ocean? Anything you want, anything you want. You can put stuff down. You can pick stuff up. You can just sit there and listen. You can sit there and, listen and shoot at somebody. It's just amazing what you can do at the bottom of the ocean. But the technology that's out there right now is just unbelievable. One of the problems is that some of it's so good that they just don't even talk about it, And so yeah. I have to be a little bit careful because people tell me stuff and it's kind of like, okay, I don't have a security clearance, but I can put two and two and two together. I know how to add, and but I'm very impressed with what the U.S. defense complex, which includes foreign companies, Australians, Japanese, Canadians, certain European groups are doing in terms of rebuilding the whole defense complex. So it's not doom and gloom. Oh, it's the end of the Russian Empire or something like that. No, I mean we started off talking about the Russian-Japanese War, but that you may as well use some historical analogies. Learn from it. Try to learn the right lessons from it.
And while I think of it, if anyone thinks of any questions or any questions occur to them, please type them in and we'll get to those, a little later on.
If I could add to that. So there was a question. I went ahead and pushed it back. It was a paragraph. If you could just kind of focus the questions, we're trying to read them, filter them into the conversation as we're going. So keep that in mind. I'm just a Polish kid from Jersey, right? So go easy on me here with what I got to do, multitasking right now. What do you think, Adrian? Is it time to switch to the conversation to money?
Could be.
Okay. I think Byron's ready to go.
Yeah.
Okay, go
Yeah.
ahead.
So my first thought here is, we've seen polarization in the world clearly. It's kind of like even before the bombs started falling in Iran, we've seen kind of the world, kind of separate to sides. You got one side, you got the other side, the good, the evil, whatever you want to call it. Um, the We're seeing that militarily. We're seeing that with alliances. We're seeing that, just in talks and how different countries are aligning themselves. Um, I'm starting to see it in money. I've been seeing it for quite some time. I think we triggered that. Actually, when we started weaponizing the dollar, we really kind of forced that momentum in. And, at the end of this conflict, I think the world's going to be a little bit more polar than it was to start with. Um, what do you see going on with the world's money going forward as a result of this conflict and others that have been, popping up around
Well,
the globe?
yeah, what's going on with the world's money is that it is backing away from using the dollar. The dollar has a lot of momentum because of historical reasons. It's a lot of impetus and a lot of energy, from the last, 75, 80 years, actually from the last, probably 150 years, really, when you think about how the U.S. Became a, sort of a superpower in its day, probably after the U.S. Civil War, by the 1780 or 70, by the 1880s, 1890s, the U.S. had really become, the big economic power of the world. Britain had its empire, but the U.S. is where a lot of the money was being made. And so, the dollar has a lot of strength behind it, and it's kind of like what Adam Smith said after the Battle of, for God's sakes, what was it, Saratoga? When somebody says, "Oh no, what are we going to do?" and he said, "Oh, there's much ruin in an empire." Well, yeah, there's a lot of ruin in an empire, so nothing unwinds, all at once. But when you look at what's going on with gold, Rich, you see this, Adrian, you see the gold is going to central banks around the world. Maybe
Yeah.
maybe our central bank doesn't buy gold. I have no idea why they don't. I mean, they should, but we have our questions about what's in Fort Knox, but but the rest of the world. I mean, China's been buying with both hands. Uh, India buys. Russia's been accumulating. They a little bit. They
They
sold a
had to
little
sell
bit here and
some
there.
too because they had to pay
Yeah,
for some things.
they need some cash to just pay the bills. But other countries, and probably when you look back for the last couple of years, there's nearly $1 trillion worth of dollars that have been converted into gold. That is not something. That is not a trade that you unwind like just on a whim. When these central banks buy the gold, when the Chinese buy the gold, and put it in their vaults, wherever those vaults are, buried in deep tunnels somewhere, guarded by People's Liberation Army and a bunch of guys with nuclear weapons at the front door. That they're saying something. They're waiting for things to happen, and when they happen, they will be ready. So in terms of what should an individual investor do? Well, you should guard and preserve your wealth, and you should be buying too. You should be accumulating too. Well, but it doesn't pay any interest. Yeah, but it's nobody's. It doesn't default either. And as long as you can control it, I mean, bury it in the backyard if you need to. I mean, securing it is a whole other issue. Rich, you deal with in terms of, where do I store my gold? Oh, a little bit of gold you keep at home, not too much. The other you keep off site. I mean, I have gold, but it's not here. I mean,
Put in
I
the
have some
hands of
stuff here.
professionals
I
for
have some
sure.
stuff here tonight, but I mean that goes back to the vault tomorrow, just because I don't keep that stuff around. Uh, I break it out when I have a talk, or I break it out like maybe once a year to just sort of look at it and go, "Oh, isn't that great?" But you know what? When you go, "Oh, isn't that great?" That's really great. That's a good feeling when you look at it. You think, "Yeah, Um, I mean, this 5 ounce gold here. I think I bought this at probably about $300 an ounce. And do the math. I have protected I have protected that wealth from way back when. And there's even more on that. This is 5 ounces of gold right here. Do the math. So it's if you're not into gold, get there. I mean, Rich. Talking to Rich and
Saying the
Adrian.
same thing. I just wrote
You
an
know,
article for our
what can I
newsletter
say?
next week. It's the same
But
thing. If not
but in
now,
terms of like
when?
where's the world going? The world is going to um, uh, something where the dollar isn't as all powerful as it used to be, and people are going to be trading and settling their debts and their issues, at least at a national level, probably at big corporate levels and everything, using some element of gold. I mean, a guy I work with, Jim Rickards, he likes to say that if you took all the U.S. M2, all the U.S. money supply that's out there, which is, I mean, I'm only doing this because trying to stay on the screen here.
Yep.
I'd need a really long arm
It's
to show
massive.
you how much money is out there. My arm isn't that long. But if you backed the U.S. dollar at like 40% gold, the price of gold would have to be something like $40,000 an ounce. So that's a 10x from here. Now, is that mean it's going to happen tomorrow or next week or next month? No, but it means that over time.
We're headed.
Yeah. But let me give you another illustration though. I hold in my hand a $20 bill. I got it out of the ATM machine at PNC Bank in Pittsburgh, Pennsylvania. There's a $20 bill. Okay. I hold in my hand a $20 gold piece from 1924. It's 102 years old. U.S. This is an ounce of gold. In 1924, this $20 gold piece was worth $20. And now today, to buy this ounce of gold, it's just without even worrying about the numismatic value, to the extent there's any markup to it. I mean, Rich, but today, let's say it costs, pick a number, $4,000. That's probably a little bit low. But that's 200 of these. I need 200 of these to buy one of those. Now, another thing I show you here, this is a $20 gold certificate. $20 gold certificate from 1922, almost, 1924, about the same. Way back when in 1922, the U.S. government issued these things. And I don't want to get into the printing, it's very small, but it says, the treasurer of the United States of America will pay to the bearer upon demand the sum of $20. This was a $20, bearer note, you might say. This is not $20. This was $20 back then, $20 because gold was money way back when. But so way back when, this piece of paper would get you one of these. Today, this $20 note, which is of a different size than the 20, takes 200 of these. So, okay, say, gee, Byron, you're talking about stuff that happened 100 years ago. I'm not, nobody's going to live another 100 years. Well, you never know, but maybe some people will. But okay, let's not do 100 years. Let's do 50. I mean, if you're 20 years old or 30 years old, you're gonna live to be 70 or 80, probably. Let's do 40 or 30. If you're 30 or 40, you're gonna live to be 70, probably. I mean, don't get hit by a bus. But this is what protects you over time. If you just take your dollars and stuff them in a mattress, it's a wasting asset. And that's exactly what the Chinese are doing. It's like, well, we don't want your treasury bills. We don't want your bonds. We don't want okay, we'll use them for like petty cash and for trading back and forth a little bit here and there, but we're not going to keep that stuff long term because we're going to lose the value of our we will lose the value of our money that way. We want the gold. And so that's where the world's going. So that when you ask the question is, where are we going with this? Well, the dollar isn't going to go away. We'll still use, dollars. I mean, Doug Casey says, American pesos. He's kidding around, but Doug's a big kidder. We're still going to have dollars. They're just not going to buy as much, And so if
you struck a nerve, Byron. There are questions popping up regarding gold, but before we go there,
sure.
You see the central banks buying, right?
Mm-hmm.
There's more gold as reserve assets for central banks now than dollars and euro, right? That's a big change.
Yeah, those lines crossed, not too long ago.
So, and it's happened before, but it didn't take. I think this time it's taking, right?
Traction now, yes.
So the thought is at some point, I'm getting the impression the world would like to go back to something gold back, maybe not completely gold back, but fractional gold back or something like that. Do you think that's possible, or has the world been addicted to debt for so long that it just can't get there?
Well, the world is addicted to debt, but you know what? The people who are expected to pay the debt, they're not addicted to it. I mean, the world is addicted to like boomer debt. You know what I mean?
Yeah.
And the younger people coming up, and you see it
They're
in
not big fans.
American politics. You see it in European politics. You see it across the world. The younger people are like, dude, I can't get a job. If I get a job, I can't make a lot of money. Can't afford a car. Can't afford a house. I want to take a vacation. I can't do that. Can barely afford groceries. The rent's killing me. The rent's too damn high, as the man said in New York. I'm gonna elect what's his name to be the mayor of New York City so that he can fix it all for me. Yeah, great. Good luck with that, guys. But I mean, so when I mentioned all of
Passing
that,
on a good world here.
yeah, I mentioned all that sociological development going on out there because do you really think that the people who, the establishment right now expects to pay the debt, do you really think they're going to pay that debt? I don't think so. I think something's going to happen. I mean, I don't know if we're going to have the Bolshevik Revolution here. I hope not. But along the way, a lot of that debt's going to either get inflated away or repudiated, but it's not going to get paid. It's not going to get paid with anything even approaching what people consider the value of it. So, for decades, we've robbed the future. And people say, "Oh, I'm going to blame the boomers." Guess what? It was the World War II generation. It was the greatest generation. All those wonderful people that went off and fought World War II and blah blah blah. Who do you think was running the country in the 1960s and gave us Vietnam? Who do you think was running the country in the 1970s and gave us the breakaway spending in the 1980s? Who when spending started to take up? I mean, it was them. And then the boomers came in and they and when I say boomers, I mean some boomers. I mean most boomers. If you look at the demographics, most boomers, people aged, pick a number, 60, 63, I guess, and older at this point. I think
1964 and older. I just missed it. I'm sorry, 62 and older.
Yeah. Okay. Yeah. Most
61.
boomers.
I just missed it.
Yeah. Most boomers are in economic dire straits. I mean, most boomers have almost no real savings. They're living on retirement. They're living on Social Security, whatever. Yeah, sure. You got the boomers who have the house in Aspen and they got the penthouse in New York, and they've got gazillions of dollars and stuff because they got into assets, during a period of asset inflation. But anyhow, when you say, with all this debt out there denominated in dollars, are we going to still need dollars? Well, I don't know. Not if the debt gets repudiated, or not if the debt starts to get paid off with worthless dollars. I mean, if I walked into a bank today with this 1922 gold certificate and said I would like $20 of gold from you, they would say no, it's illegal. I can't. First of all, we don't have any gold, and secondly, I'm not going to give it to you.
You probably wouldn't even know what it was.
They wouldn't know what this is. They'd think I counterfeited it, even though it was printed by the U.S. Treasury.
It triggers CTR.
I mean, they give you one of these, but takes, like I said, it takes 200 of these to equal the value of one of these, which was one of these. And so I know we're talking about a century, and nobody wants to think about a century. Okay,
you can just go back to 71, though.
I'm sorry.
Yeah. You can just go back to 1971 if you want.
When the wheels
numbers
fell
are
off
still bad enough. But
August
Byron,
15th,
we all say, with the debt, you can either, it's too big to grow out of it, it's too big to tax our way out of it. And so it's either, repudiation or pay it off with worthless dollars. We all say that. But, the idea of paying off our debt with dollars that are worthless, which is what's happening now, let's face it, when the dollar's lost 90% of its value in the last 20, 30 years. That's what's happening now. But isn't that at conflict with what Kevin Walsh at the Fed is talking about of having a stable money? And so he cannot succeed in his goals. Or let me ask you the question: how can he succeed in his goals when we have so much debt?
Well, I don't envy the people whose job it is to undig the hole that we're in. There are things that he just plain has to say. I mean, he's part of a system, and he has to talk the talk, and walk the walk of the whole kind of macroeconomic theory. Gold is the barbarous relic, and academic economics is is how it all works and everything. I really just think it's a case of people playing Russian roulette with money, in the sense that you're handed. I don't know if we can do this on YouTube. I don't want to get us deplatformed or something. You're handed a certain item and you said, and you spin the chamber, and you're gonna do what you do when you play Russian roulette. I don't want to get us kicked off YouTube or anything. And uh, and that's what these guys are doing. They're just hoping that the whole system doesn't crash, that the ship
Not
doesn't
on
hit.
their watch anyway.
They don't want to hit the iceberg while they're the captain of the ship. They'll blame somebody else, down the line. But how much longer can it go on? I mean, $40 trillion of debt. And when you look at the space shuttle, Elon Musk, Falcon rocket ascent profile of the U.S. national debt and the interest on the debt, Kevin Warsh was put in there by Trump to, he had one job, which is, don't stab me in the back with an interest rate raise, which he didn't do today, and he won't do in September. But I'll guarantee you he's going to raise rates. He's going to raise rates after the elections. I mean, he's going to have to.
So Curtis asked. Oh, go ahead, Adrian.
No, go on.
I would say Curtis was asking, because this comes up a lot. We say, well, at some point there'll be some sort of jubilee, or there'll be a repudiation of the debt, or what have you. So Curtis is like, who and how can a debt be repudiated? What does that look like? A lot of people throw that out there, but what does that actually look like?
Yeah, it's going to be a mess because somebody's debt is somebody else's asset. I owe you money, and you have a piece of paper from me that says that you can collect it from me. And what happens when I say I'm not going to pay you? I mean, debt is a good thing if you use it to do something productive. I mean, if I borrow money and I build a house, I got a house. If I borrow money and I buy a car, I got a car. I mean, they can repo the car, they can foreclose the house. If I borrow money and build a bigger steel mill, I got a bigger steel mill. That's great. I mean, we've funded just sort of operations for decades. We funded the welfare state with debt. I saw this not funny. I saw this shocking number that in the last year and a half, the Social Security Administration has eliminated. I think the number was 3 million people from the Social Security rolls who were collecting money they were not entitled to. And this includes those people who were like 120 years old and 130 years old. I mean, nobody's 120 years old. Maybe there's like 5 people in the whole country.
I think there's one lady in the Congo or something.
Yeah. Maybe there's 5 people in the whole country who are 120 years old. But they had thousands, tens of thousands. And the Social Security people were saying, we're estimating that that by eliminating these 3 million fake Social Security recipients, we're saving some big number, like $12 billion a month in Social Security. Well, that's okay. Do the math. That's almost $150 billion a year of fake Social Security payout, and that's all being paid for on debt. We're just adding that to the national. No, there's a lockbox. There's a trust fund for Social Security. No, there isn't. You get your paycheck. They send the money into the Treasury. It goes right back out the back door. The instant that it hits the account. There's no Al Gore's lockbox of Social Security. No, that's not how it works. But that's a great question. What does a jubilee look like? I guess we're going to find out.
Folks have argued that we've seen a couple jubilees already. When we collected the gold, we confiscated gold in 33, and once we had enough of it, we devalued the U.S. dollar. That was what, a 60% devaluation of the U.S. dollar.
Went from $20 gold to $33 gold. Yeah.
So I mean, that was a huge devaluation. That was kind of like a jubilee. The next jubilee occurred, I guess, in 71, right? When Nixon closed the window and he said, right, you can't exchange these anymore. You can't take this $20 piece of paper and walk out with a $20 gold piece anymore. Now just trust us. It's all good. It's going to be temporary, right? But it's all good. We're backing it up with our good faith and credit. So I guess that's what jubilees look like. I don't know what the next one's going to look like. I really don't.
Well, the next one will probably not be something that the United States itself really can control. I mean, what do we do when we wake up one morning and the Treasury has an auction and literally nobody buys the treasuries? It's like, okay, yeah, we'll raise the interest rate a little bit. It's like, we still don't want it. We'll raise the interest rate. We don't want your stuff. We don't want that stuff. I mean, that could be what it looks like. And when that happens, boom, the United States has a currency crisis. It's like, oh no, and bets are off on that unless you happen to, you know, well, you bets are off. But what you should be doing as an investor, you should have physical gold and silver. The mining shares are, gold in the ground, silver in the ground, and the operational expertise to get it out. Royalty companies, things like that. I mean, we're still going to need something to live on. You're going to when you go to the store to buy, a head of lettuce and a dozen eggs, you're going to have to give, Farmer Jones something for them to give you the eggs or to give you the quart of milk or the head of lettuce or something.
Seashells aren't going to cut it. Stones aren't going to cut it.
Pretty stones. Yeah.
Okay. All right.
But it's really, the debt is just the astonishing thing. And when I hear people sometimes say, oh, you're making too big a deal out of debt because, the US has had this big a debt ratio in the past. Look at the late 18th century. And of course, as you pointed out, Byron, the huge difference was painting with a very broad brush. For the last 30 years, or let's say the last 40 years leading up to the First World War, the debt that the US had, which was very high relative to GDP, was overwhelmingly productive debt. Overwhelmingly, it was debt, it was investment. For the last 40 years, it has been overwhelmingly, spending. And we can argue that some of that spending is justified or not justified or whatever. But from an economic point of view, it sort of doesn't matter. You're borrowing money just to spend it. And that's unsustainable. It's plainly unsustainable. And you only have to look at the difference between now and let's not go back to the 19th century, go back to Paul Volcker in 1980, when the debt to GDP of the government was around 45, 50%.
Mm-hmm.
What do you say?
About 40 or so, yeah.
Yeah. And today, we're at 120, 130%, which is why they simply couldn't, even if they wanted to, they simply couldn't do what Paul Volcker did again. They simply couldn't.
Yeah, 20% of 40 trillion is a much bigger number than four. Do you think it's possible maybe the Jubilee looks like this? Maybe there's a switch from the dollar as the reserve currency to the reserve currency being a basket of major currencies and real assets. It could be gold, silver, oil, copper. And in effect, the dollar could still be 85% of that basket, but it would in fact be a devaluation of the dollar. Is that something that could be put together?
That's something that could come out of a conference or something somewhere. That would be if everybody came together, just they all smoked the peace pipe, everybody put down the tomahawks, and said, okay, guys, we're all going to come together. Let's work this out, and we did a basket. But but a basket of stable currency is also going to be a basket of serious discipline and if not punishment to countries that where their spending's out of control. I mean, if somebody goes to Congress and says, Congress, you guys can't pass these kind of budgets anymore. You cannot do this. You have to cut every. Holy smokes! I mean, all of a sudden the politicians are going to have to actually do some work. They're going to become. They can't just be Mr. and Mrs. Popularity by handing out walking around money. And that's the same thing in Europe. I mean, Europe has this huge welfare state, and people say, oh, they have free healthcare and all. It's not free, okay? They got the welfare state, the nanny state, and they got horrible defense, systems over there. Britain doesn't have they don't have a working submarine anymore. That kind of stuff. The Germans. I mean, I think they have like 4 combat aircraft that'll fly, stuff like that. And so so they've shirked on their own national defense. They've built this big welfare state, and they can't afford it. And it's certainly in a world of high energy prices, they import a huge amount of their energy, and they blew up the Nord Stream pipeline, so the cheap gas from Russia, that's gone. And then with LNG tankers being blown up in the Suez Canal, that's good luck with that. And and importing oil from wherever. Europe's in trouble, and so anyhow, I guess it gets back to the point about could there be a basket? Yeah, if everybody agreed on it. But then once they agreed on it, once you agree, you're not supposed to cheat. And will people still cheat on it? That's the question. What's the discipline that keeps people from just okay, I got this basket, but yeah, so what? I'm just going to keep spending. I'll just keep spending these new these new doleros or whatever we want to call them. Good luck with it. It gets back to what holds value over time. I just I love show and tell. Where's my show and tell? Here it is.
You frozen. There we go. Unfrozen.
This is something that looks like a silver dollar. From the mint date on it is 1877, and this was a San Francisco trade dollar. The U.S. This was not a silver dollar issued by the U.S. government as currency for the United States. This was a silver trade dollar made out of the silver from the Comstock lode in Nevada, and it was used mostly in the China trade. And so, I mean, this is an ounce of silver, and it's about as pure silver as you could have gotten back in 1877. It's got a few other alloys in it, but the Chinese were big on silver. So a lot of these coins that were minted in San Francisco, the San Francisco Mint, went to Asia, went to China, because they didn't want U.S. paper dollars. They wanted silver, and this is what they got. And and over the times they've made their way back and into coin collections, and things like that. So I mean, we could very well be going back to a world where where trade is much more in the nature of barter. I'll give you oil, but you need to give me agricultural goods, or I'll give you the copper, but I want advanced machinery in return. I mean, by doing it in dollars or doing it in euros or doing it in something, I mean that eases the idea, of commerce. I mean, it's a pain in the neck to think, well, how many bushels of corn do I have to give you for 100,000 barrels of oil? I don't know. Somebody's going to have to figure that out. And it gets messy. I mean, that's why using like currency is a good idea. But if you're going to cheat on your currency and debase it over time, it's just a race to the bottom, And
we've clipped our currency just like the Romans and everybody else that had currency prior,
Right.
just in a different way. So there's a couple questions here. One comes from Paul. He says, as Gerald Caliente says, or Salente says, when all else fails, they take you to war. How will gold react if when we do go to actual war? Now, I will tell you, the people that are in harm's way, they're in actual war right now. I'll tell you, no question. So far, it has been non-responsive to the fiasco taking place. So, I guess he's reacting to the idea that, gold is not moving up on conflict. It's actually moving down on conflict, moving up on peace. Different than what a lot of people think gold should be doing here. What do you think it does when things escalate from where we are now? Hoping they don't, but what if they do?
Yeah, what if they do? I when you look at the run up in gold, gold ran up due to war. Gold ran up starting in 2022 when Russia moved into Ukraine and we put sanctions on Russia, and all of a sudden, by doing that, the U.S., because it's our money, it's our U.S. dollar, and the West in general, because they were standing right behind us saying, we'll fight to the last drop of your blood here. The gold price started to run up due to a war. So from $2,000 an ounce, let's say back in 2022, I'm just kind of going off the top of my head, to pick a number, $5,000 an ounce. That more than double was a war-related increase. Now along comes the U.S. in Iran in the end of February, in March. The March kinetic side of the war, and gold has been drifting down ever since. Okay, there was just a whole lot of other things going on that were draining the air, draining the helium, you might say, out of the balloon, out of the party balloon. In the last couple of months, the war is risk off. So a lot of people are like, well, I'm just going to pull in my horns here. I'm not going to bid up the gold. If I have it, I have it, but I'm not going to bid it up. When you stop bidding it up, it stops going up. Guess what? Another thing that happened is some people, some countries, some did sell gold. Why did they sell gold? Well, because the oil that they were buying at $70 a barrel all of a sudden became $120 a barrel, and they needed dollars to buy that oil. So they sold some gold. Now, how much gold do you have to sell to move the price from 5,500 bucks down to say 4,000? Do you have to sell a whole lot? I think not. I don't think you have to. Rich, you do this for a living, man. You don't have to. I mean,
It's a tiny market. It's a
it's a
tiny
tiny
market.
market, yeah. And the gold price is not run by. It's not set globally by me buying a coin or anybody out there who buys it. It's not by coin collectors or it's not because Byron bought a 2024 gold $20 gold piece. Come on, the gold price is set by central banks. I know you said this at the beginning. They are buying gold for the long haul. They put $1 trillion into gold, and that is not a trade. That is a long-term commitment.
Yeah, and they don't care about the price either. They didn't buy any less gold at 5,500 than they did at 2,000.
Yeah.
They don't really care. They want gold at any price.
Yeah. So we had risk off. We had people needing dollars. We had the bids. The bidding up stopped, and a whole lot of other things were just sort of happening. You've got the whole tech, the whole tech bubble, the vaporware bubble that's just sucking capital out of the markets. Because we're going to invent the next great AI. Even though every time somebody invents the next great AI, a week later some Chinese company comes in with the a slightly pirated version of it. It's like we're going to undercut you with what you just did. We're going to train our AI. Well, we'll train our AI on your AI, and then you'll never make any money off of it. I mean, it's and because Western markets are crazy about that. So the question is, what happens if the war gets really big and everything else? Well, watch what who's going to win, who's going to lose. I mean, if this turns into the Russian-Japanese war, and the empire that sailed its fleet around the world loses, and you don't have to get all your ships sunk like at Tsushima in 1905 either. If the empire that sails its ships around the world on the big expedition, comes away and it's not a win, that's bad for the dollar.
Yeah,
And that's
same
good
thing.
for gold. I don't want to see our guys lose because our guys are me. They're our guys. But I'm just saying, if we win, I mean, if Iran falls, the Revolutionary Guard, if they we kill them to the last man, or they finally out of the rubble, somebody waves a white flag. Good luck, because they're just absolutely committed people. They seem to be. Now, okay, now we're victorious. Now what happens? Well, what happened the last time we won a big war? What happened at the end of World War II? Well, the U.S. was really strong. We had a big industrial base. Everybody else was destroyed. We had a huge amount of gold in Fort Knox and New York City, and the West Point vault and everything. And so so we ran the table for the next many years. If we come out of the war with a win and it looks like we know what we're doing and the dollar is strong, well then gold's going to go down. But if we come out of the war in this sort of however the war resolves, win, lose, draw, whatever. If it's just this muddling along sort of thing where, we're just going to spend money we don't have on stuff. We're not going to pare back the welfare state. We're going to, we're going to keep the huge military expense, going. We're 40% of the federal budget every year is going to be borrowed money, and the national debt's just going to keep going up. For why would gold go down? I don't see any reason for that. So,
Can I just jump in there a second
sure.
on that question? I think there is a misunderstanding about how gold acts or reacts to a military conflict, to a war. If you look back over the last 60 years, remember almost every military conflict or event um, is very rarely do they come completely out of the blue. Very rarely. And so what you typically see, you go all the way back for 60 years. Gold typically will go up in advance, in anticipation of the conflict. And then when the conflict starts, it'll fall. And this is true even of the Russian invasion of Ukraine, which you referred to, Byron. But you look at gold 6 weeks ahead of the tanks crossing the border, gold was moving up strongly. 6 weeks after the tanks crossed the border, it was back to where it started. And so I think there's a misunderstanding where we expect gold to go up. Now, why is that? Byron's, mentioned some of it, but I just want to kind of mention a few other things. One of them is buy the rumor, sell the news. No question about that. One of them, remember, there's a safe haven asset in the world. It's called the dollar. And so when you have a military conflict, the dollar goes up and yields go up. Well, when dollar goes up and yields go up, other things being equal, gold goes down. So
Yeah.
it's not unusual. It's not illogical that gold falls when the dollar and yields go up. And then the other thing, which Byron also referred to, of course, is the selling that takes place. Anytime you have a military conflict anywhere in the world, there is some um, there is some need for liquidity somewhere. It may be very confined regionally or geographically, but there's always some. And we saw this very, very clearly with Iran. The Gulf states needed liquidity, and so you saw gold trade at a discount in the Gulf. People who had gold stored in Kuwait wanted, in Dubai rather, wanted to sell it. Well, I would too. I wouldn't want my gold to be bombed by Iran. And then obviously there are the second and third effects. You've got Turkey, the lira went down, so they needed liquidity to defend the lira. And we preach this all the time. What is the ultimate source of liquidity? It
Gold
is
and silver.
gold.
Yeah.
So it is not
Mhm.
illogical that when people need liquidity, they actually sell some gold,
Yeah.
especially when it's more than doubled in the last 3 years. And so when you look at all these things together, first of all, we need to realize that historically gold typically falls during a conflict, but there are sound reasons for it. It's not illogical. And then the second part of his question was, if we get into a real war, and by real war, I guess he means, troops on the ground and so on and so
Full
forth,
scale declared. Yeah.
gold will react when the money supply starts moving up dramatically to feed the war. This is what we saw in Vietnam, of course. So we had runaway money supply and gold was reacting, but gold was reacting to the money supply, not to the war itself.
All good
Something
points.
similar happened with silver in the 60s. That as the U.S. Great Society started to ramp up the spending. I mean, the inflation was such that they had to withdraw the old silver coins from circulation because the 25-cent piece was worth it was it was they could not the 25-cent piece was worth more than that just
25
as a
cents.
note
Yeah.
Right,
another piece of metal. That has to do with silver, but yeah, um, same reason nobody walks around carrying $20 gold pieces anymore.
So got two quick questions here, and then we're probably going to have to wrap up. It's already like 8:20. We've just been kind of swimming along here.
Yeah.
Paul was asking, and it kind of is related. Where do you see gold and silver going in the next 3 years?
I see them headed upwards. I mean, nothing goes in a straight line, but
True.
it'll be event driven. It's monetary driven. It's crowd psychology. Uh, our dear friend Rick Rule likes to point out that if you look at the entire universe of investment out there, the trillions of dollars worth of stuff, whether it's SpaceX or Tesla or Apple or Microsoft or and you look at the size of the market, big huge thing out there, maybe 0.5% of the market is precious metals, and if that 0.5% just became 1%, that would be a double. 1.5%, that's a triple. And so well, what could cause that? Well, what could cause that is that if more people than just Rich and Adrian and Byron and the people who are watching us, if a whole lot more people decide, oh yeah, I think I better get some gold, you know, that whole flood of humanity across the table saying I want some, that would be at the individual level. But then also it's not, like I said, it's not coin collectors, not the guy who goes to the coin store who drives the price of gold, but the family offices, the large global corporations, the big banks, I mean, governments around the world, central banks around the world. They're looking and they're saying, We are prudent people entrusted with the destiny of our nation, and as prudent people, we have to do prudent things, and that means we're going to lighten up on the dollars, and we're going to heavy up on the precious metals.
Yeah, no, it's a good point. I think we all see it going higher for sure. It just needs to. It's the world's only real money, period.
Mhm.
And one real quick, Richard, I'll take this one if it's okay. He says, a long-term gold investor, should I buy gold bars instead of coins? I'll just tell you, maybe you have a thought, Byron. I know you're into both.
Mhm.
I think wherever you get the best deal, I've heard over the years so many times people say, I want to buy government issued sovereign gold coins because they're more liquid, right? 30 years of doing this, I've never ever had the opportunity where I could not buy a gold bar or I could not sell a gold bar. Pretty damn liquid. Where you get the best deal, where you have the best comfort level is where I think you buy your gold, and how you buy your gold. I don't think it really matters if it's in a coin or a bar. For the same price, I'd take the sovereign coin too.
Mhm.
That pretty accurate?
Yeah.
Yeah, and actually these days, what certain coin dealers have told me, Rich, you would know this better than me, but there are so many people who have come out of the woodwork to sell coins just to raise cash so they can pay off their credit cards. But a lot of the numismatic markup on these coins is
On.
is gone. It's just, I mean, made for certain really rare coins, yes, of course, but then don't go there unless you are a really serious collector in this. You get yourself burned. But I mean, the melt value of a lot of these old coins is just that. It's the melt value.
There's no question. Yeah.
Along these lines of show and tell here, I hold in my hand 10 troy ounces of fine silver that were issued by the U.S. Assay Office in San Francisco in 1981 during the Hunt brothers evolution, where they drove the price of silver from a couple bucks up to 50. Uh, the U.S. government had all this old Comstock load silver literally sitting in warehouses as big bars. And in order to hurry up and get the price down, the U.S. Treasury released this U.S. assay silver. So this is 10 ounces of silver, and what's 10 ounces of silver is worth 10 ounces of silver. There's nothing terribly special about it, other than that it has a certain sentimental angle to the 1981. But it's like you said, that as long as the metal is good metal, you're going to get the price for it. If you're new to this whole side of the investing side, you don't want to trade in and trade out with real metal, because you get killed on the markups and the markdowns when you hand it across the counter. No, this is the kind of stuff you buy for generations. You buy this stuff for years, and you put it away. And like I said, you look at it like once a year just to say, oh, hey, look, isn't that cool? Or you bring it out when you have a little show and tell on the YouTube. But yeah.
The one caveat I would say, just to guide you, is if you don't have a trusted metal dealer, find one.
Get one.
I'll throw my hat in the ring. The bottom line is, there are bad people in our industry, right? Where you buy your gold does matter. We just had another failure of a gold deal that's been around for about 18 years, because they didn't do business properly. We buy from wholesale distributors who are source distributors for the mints. We know our product is
Yeah.
good. We know you can trust it. So whether you buy a coin or a bar, if you're buying it from a trusted, reliable source, you're okay. Take what you most like, you most feel comfortable with. So we're kind of at the witching hour here. It's about 8:23, and I do want to take the opportunity to kind of go around. We always do this. We'll start with you, Byron, and basically, if you want to leave somebody with, or this audience with, one final thought, if you forget anything, this is what you should remember from tonight. What would that be? And then also take the time to let folks know how they can find you at Paradigm.
Well, thank you. First of all, if you seek and you shall find, you will go to paradigmpress.com. Paradigm, Paradigm press. That'll get you there. On the YouTube, we're going to have a link for the landing site. That'll get you to the landing site, and then you get in and like I work with the Strategic Intelligence franchise. That's Jim Rickards and Dan Amos and Zach Scheit, and we've got a whole team behind us, and we we publish a monthly letter that goes out to a lot of people, and then we do weekly things that go out to smaller numbers of people, and you get yourself signed up for other things that kind of come with with the newsletter. That's who we are. That's what we do. We do not take advertising. We do not do paid pump and dumps or anything. I've had people say, "Oh, how much does it cost for me to hire you to write a glowing article about me?" Well, it doesn't cost me anything, because if I like what you're doing, I'll write about you, and if I don't like what you're doing, I won't write about you. Because we don't do stuff like that. So it's all we are subscriber driven, and we owe our loyalties to the subscriber. Now, in terms of parting shot, we've covered a lot of things here, from the Russia-Japanese War to Iran to oil to LNG tankers burning in the Suez Canal, gold, silver, etc. You need to understand. I want to make sure that you understand how hard it is to get metal out of the ground. I mean, Rich, on his display behind him, he has all these beautiful gold coins and everything. They don't come out of the ground looking like this. This 5-ounce gold ingot here, this doesn't come out of the ground looking like this. You're talking about mining, a gram a ton, or a fraction of a gram a ton, to get the stuff out. You got to crush it, and you got to treat it with chemistry, and to pull that stuff out. And same, gold, silver, copper. I mean, in the olden days, this is elemental copper from the Keweenaw Peninsula of northern Michigan. This is a glacial float. Basically, the glaciers kind of ripped it out of the rock and bounced it around, and I cleaned it up a bit and got all the the rock, country rock and stuff off. But this is pure copper, 98% copper, a couple other elements in there. But and this is not what we mine anymore. Okay, what we mine anymore is like porphyry copper that are like 0.3% copper. Okay, let's do a little math here. At 0.3% copper, you got to mine 300 tons of stuff to get 1 ton of copper. That's 299 tons of waste. That's a lot of rock to move, a lot to crush, to treat, to do the chemistry, and to get it all out of there. And that's just for copper. I'm going to show you. This is a jar, and you can't really tell, but I'm just going to tell you what this is. Tellurium. This is tellurium. It is a very, very important technology metal. This is a pound of tellurium in this glass jar here. It's worth hundreds and hundreds and hundreds of dollars. I don't want to. It's painful to think about how much this stuff is worth, because for as scarce as copper is in that 0.3%, porphyry that they're pulling it out, the tellurium is even more scarce. To get this pound of tellurium out of the ore deposit, they probably had to go through. Oh, I'm trying to, let's see this. I have to do the math. They had to go through probably 1,000 tons of rock to get this pound of tellurium out of there. That's how rare this stuff is. So now the good news is that it comes out because they get the copper first, and then they run the waste through another stream. But when we talk about these technology metals and these minor metals and things like that the Chinese do and we don't, good. Thank you, Rio Tinto, for adding a tellurium circuit to the Bingham Canyon mine in Salt Lake City, Utah. But I mean, when we talk about rare earths, when we talk about tungsten, we talk about antimony, gallium, germanium, the things that make modern technology work. Here's your iPhone. Here's my iPhone. Out of 92 elements on the periodic table, 63 of them are inside my iPhone. You can't do technology without this stuff. You can't do defense without it. You can't do aerospace without it. You can't do medicine without it. You're watching a computer screen or your iPhone or whatever you're looking at, watching this show. Can't do it without that. And I just want people to understand how really, really, really hard it is to get this kind of stuff out of that rock that's out there. But this is why this is why we like the mining sector. This is why we like the metal sector. Gold, silver, platinum, palladium, copper, tellurium. Here you go. So that's my parting thought. And thank you for your time and your interest. And I'm so glad that we can share some thoughts with you tonight.
All right. Thank you, Byron. Much appreciated. And that is not an unimportant point. Adrian, your thoughts?
Yeah, well, first of all, you mentioned the importance of going with a reputable dealer, and your firm, Rich, as you know, this is why I'm on the show co-hosting it with you. But needless to say, I don't do this if I don't like the people. But I recommend and endorse your firm unambiguously and unequivocally. There's
Thank
only two or three dealers in the world that I do recommend, and you're one of them. So if you're new to this space, put yourself in the hands of people you can trust. That's what I would say. The parting thought, I think, is, throughout the discussion, we talked about how gold has protected your purchasing power for 100 years, since 71, that's 40 years or whatever.
55,
Do
yeah.
the math.
55 years.
And how it's protected your purchasing power in the last 3 years. It's also protected your purchasing power over 2,000 years, because as we know, a Roman centurion's outfit cost about the same as a suit of clothes for a man today. So gold has preserved purchasing power over long periods of time as well over the recent past. And I think the discussion tonight strongly suggests that there is no reason to think that it won't do the same for the next 5, 10, 25 years. And so the importance of buying physical gold cannot be overstated. You can get hold of us at adriandayassetmanagement.com. I'll leave it there.
All right. And I'll throw it right back to you, Adrian. The reason I work with you is because I know and trust you. And I've seen firsthand the work that you've done for us. Now, I know past performance, no promise of future, results, whatever. But I can tell you, Adrian Day is very good at what he does. We use him for that reason. We're not stupid. We've used him for a long time because he's been very, very good for a long time. So if you're not, if you're trying to go it alone in the resource space, I suggest there's a much, much better alternative, and he's on the screen here tonight. Byron, longtime friends, longtime admirer of your work. You were a fountain of knowledge, and just somebody that I think everybody listening should want to listen more to. By all means, go to Paradigm, sign up, and get your pearls going forward. For us, the way to reach us is info ASI at assetstrategies.com, or you can call us toll free 800-831-0007. We do have a special for those registered and attending here this evening, and that's anybody who buys anything for the balance of this week. We're going to get you free shipping, handling, insurance. So regardless of, you don't have to meet our minimum of 10 gold coins to get free shipping. We'll do it on one gold coin. And then the last parting shot is, I hear a lot of people talking about how gold has not performed so far this year. And yes, it's down for this year. But what a lot of people don't realize is if you had bought gold a year ago, just 1 year ago, you're still up 22%. Still up 22%. If you bought silver 1 year ago, you're still up 60%. Okay. Um, don't get mired up in the short-term noise when it comes to precious metals, real assets in general, whether it be tellurium or what have you. Look at the big picture, and the big picture is clear and unmistakable. We're going up as long as we're measuring it at mismanaged dollars. So with that, just want to announce our next webinar will be September 9th. That's Wednesday, 7 p.m. Eastern. And Adrian, who's going to be our guest?
Oh, I believe that's Frank Trotter,
Yes.
now of Battle Bank.
Yes. Yes.
So that should be a great conversation. He's another one of our long-term friends. And let me just say, we've talked about long-term friends, and I cannot overemphasize the importance of dealing with good people. That's why we asked Byron on the show. That's why we asked Frank Trotter on the show, because these are good, honest people. Don't always agree with everything everybody says, of course not, but they're honest people that you can trust.
Amen. Amen. And I'm going to leave it right there because I couldn't say it better myself. So thank you, Byron. Thank you, Adrian. Thank you, everybody. We look forward to seeing you on September 9th. Have a great night, and we'll get the recap out to you in the morning.
Thank you.
Thank you.